Welcome back for another top-notch video. This week, guys, we'll be talking about the 17th of May through the 21st of May. Thank you guys for being patient. I was away on training for the last month. We are back at it with our weekly videos. We really appreciate you guys tuning in. If you're new here, the things that we talk about are the Thrift Savings Plan, or the TSP, for those involved in government or federal employees. We also talk about the ETFs, IVV, VXF, EFA, and AGG. What do these equal, you guys? Well, if you're in the S&P 500, that's what these two funds equal here. That is the C fund or IVV ETF. If you are in small caps, that is the S fund or VXF. If you're in international markets, that is the I fund or EFA. And if you are in the basically bonds or a safer fund, that is the F fund for the Thrift Savings Plan or AGG for those in the ETF. We kind of do a very basic overview of the channel, kind of go over some very basic concepts, and then we go into a technical analysis of each fund, and then we go where we are allocated on the Top Notch channel. If that sounds interesting to you, please like, subscribe, or share. Let's get right into it. So the first thing we like to look at is this chart here from the Thrift Savings Plan TSP Talk website. What did we see this past week? As you can see, the F fund was up just a little bit. That AGG fund was up just a tad. C fund was down. S fund was up. And the I fund was our winner this week with over 1% gain for the week in the I fund or the EFA fund. Basically, we're going to go over some general comments for these funds and where we see them going. Tommy does some commentary here. These are his charts. Just want you guys to check these out. Very good commentary here. Let's dig right into it. So this is the S&P 500 or the C fund. As you can see here, guys, this last month we really fell out of our trend line here. When a market falls out of this, that's not necessarily a good thing. We are just bouncing around our moving averages, which is okay, but I don't like to see it outside of this trend line and just sitting on the top of this this moving average here. That is not a good sign. We have an open gap down here back in April that was never filled. We could definitely see that filled towards the end of May or into June. So we could see this definitely jump down for sure in the future for the C fund or IVV ETF. I don't feel super confident about this, but we'll look at it from a technical analysis in a minute. The next one I want to look at, guys, is basically small caps, the S fund. Where are we sitting with that? VXF, really not good things here, guys. As you can see, towards the end of April, we really took a dip there. We even had an open gap. This market came all the way back down to 2060 and then started to come back a little bit, but the problem is we have not beat these moving averages out. We are still below these, and we formed something called a bear flag here. When we have a bear flag, markets tend to break down. Now, we do have an open gap here. I can see that getting filled in the future, but I would be very cautious moving forward with this fund just because we're in a bear flag moving forward. On a technical analysis, we'll kind of show you this as well. Moving on to the I fund or international markets, EFA, what are we seeing here? A lot of mixed charts here, not a really positive or negative sign. Don't really know where this is going. I don't really have a good feeling on it. When I don't have a good feeling on it, I typically don't invest in it. And last of all, we have bonds. What are we seeing with bonds? As you can see, guys, here is the 200-day moving average. We're still below that. We are in not a good market with AGG or bonds. We're really coming up against these moving averages here. We can see this bounce back down. We tried to get above them once or twice here in April and May. Both of those failed. We'll see if we can do it in the end of May or June, but not confident about that. The next thing we're going to move into is our technical analysis of the video. So let's go right into that. This is IVV or the C fund, S&P 500. What are we seeing here, guys? As you can see with this chart, we are within the trend line still drawn on FinViz, and we've had these drawn in since November. Now we're right in the middle of that. Problem is we are bumping up against our 20-day moving average here, and that's not a positive sign. Like I said, there's an open gap down here that has not been filled yet. It would be towards the bottom part of our trend line on this chart, which would be, it would make sense if it came down to that. Let's look at it from a technical analysis. IVV, two things we like to look at is the derivative oscillator, which is basically these green bars and red bars. When you see green start to rise, price rises. When green starts to fall, price tends to fall. This is price up here. The best example I have of that is kind of back here in September, October timeframe when the oscillator started to fall, price started to fall, and when the oscillator picked up again, price started to pick up. So that's our first indicator there. That's what we kind of judge our markets on. The second one is the price percentage oscillator. which is the blue and red line. When blue is above red, price tends to rise. When blue goes a little bit below red, price tends to fall. Okay, this is price up here. Those are our two indicators. Based off those two indicators, we kind of put together a red, yellow, green light if you should be invested in these funds. So with IVV or the C fund, like I said on those other charts, don't look super confident based off the chart analysis. What do we see on a technical analysis? Not good things, guys. As you can see here, price or the oscillator here, the derivative oscillator is starting to drop off. This is the second week now. Our price percentage oscillator is crossed. It crossed the moving average. Two very negative signs, red light signs, long-term chart for IVV, not good. Price is starting to react here. Last week we had a lot of indecision. That's a spinning top. Usually investors are wondering what's going to happen next. This week we started to see a little bit of a fall here. I don't know how long it will last. This last one only lasted about 2 weeks, but we never know how long that will last. That makes us very, very cautious, and that makes it a red light, guys, for the C fund. On short-term charts for the C fund, we are seeing a little bit of a rise. This is if you want to be invested very shortly in the S&P 500. We do have a price percentage oscillator that is above, which is good. The derivative oscillator is moving up. That's very positive, but I don't like where it's going in the future. As you can see, a little red here. Things can change very quickly within a week on this chart. You got to remember this chart is 3-4 bars in a week, whereas this chart is 1 bar per week. So we are very cautious on this chart, looking forward for the C fund. Let's move into our next fund, which is VXF or the S fund. With the S fund, what do we see here? Not good things either, guys. As you can see on this chart, Finviz drew in a double top. That is not good. Was not able to break that, and we significantly decreased in price here since the end of April. We are below our moving averages here, not above those. And like I said on that other chart, which I will bring it back to that real quick, you can see that bear flag drawn in there on this chart here. Here's that bear flag. I just think that I don't know if we'll be able to beat these moving averages, and if we don't, we can see price move significantly lower, maybe even come down to the 200-day moving average, or come down to this blue line here they drew in. As you saw, 1, 2, 3, could be almost 4, could be a 5th time before we start to see any price action there. So kind of cautious on that chart as well. But let's look at the technical analysis for VXF. Here we are, VXF. What are we seeing? Same indicators we use, long-term charts. What are we seeing here? Something really negative here, guys. As you can see here, look at this derivative oscillator. It was coming out. That was a positive sign. Then it reversed itself. Whenever we have a reverse, we call that a fake out. That's never good. They don't tend to last very long, but they tend to be violent. They tend to lose a lot of price very quickly. And as you can see, the last 2 weeks, price has decreased quite a bit in the last 2 weeks with this fund. And then our price percentage oscillator has also decreased. It's been underneath for quite some time, since the beginning of March. And as you can see, price has gone really nowhere since that indicator crossed. We've been pretty much sitting even. Now we're starting to go a little lower here. So that is not good. Again, negative sign here, negative sign here. That is a red light for VXF. Do not be invested in this fund right now. Let's look at a short-term chart. What are we seeing? Short-term charts don't look that great either, guys. As you can see, things can change very quickly. The short-term chart for the derivative oscillator is also dropping off. As you can see, it's at the very bottom of your screen there. Derivative oscillator in the green, it went from 3.8 to 3.7. That could change very quickly. Not really a good sign there. That's a yellow cautionary sign. This is a good sign, a green one. I just would stick away from it for right now, guys. Short and long-term charts. Let's let this thing kind of figure itself out before we get involved in these charts. Moving on to EFA. Like I said on those other charts, it was really hard to tell where EFA is going in the future. On this chart, it is a little more clear. As you can see, we are within these trend lines that we've drawn since almost the beginning of the year. Right in the middle here, I don't know if it'll go towards the top or the bottom, kind of just stagnant, waiting to see where that will go. So let's look at the technical analysis of that chart for EFA or the iFund. Based off technical analysis, same indicators again, guys. As you can see, not a positive sign for our derivative oscillator. It is dropping off here. 2 bars now. That is 2 weeks to the negative. Our PPO line has been flat. Look at that. A lot of indecision here. Price percentage oscillator right along the moving average. Red and blue just that's just not a clear indicator of price, not something you want to be involved in. Now, price has risen a bit, but it's very risky without knowing a positive, negative, or if it's going to go positive or negative with price. So it has been positive the last couple weeks. This last week we saw some indecision. I'm just not convinced to throw money at it just yet. We'll have to wait and see some signs for this fund. Again, I would say this one is definitely another red light. Not willing to be invested in this just yet. Short-term charts, what are we seeing on EFA? We are seeing some good things here. Increase in the price, the derivative oscillator, that is positive. Price percentage oscillator above the red line there, that is positive. Two positive signs. That is a green light for maybe investing in EFA just for this week. If you're a TSP investor, you could throw money at it just for this last week here before dodging right back into the E fund. If you, the G fund, if you had moves left, that could be a move for you for EFA. For those involved in brokerage of funds, this could be a short-term win for just a week or two if you were looking to get into something for a little bit. But overall, I'm not super impressed with the long-term charts. Moving on to our last fund, AGG or bonds. All right. This is the F fund for those in the TSP funds or the Thrift Savings Plan. What has bonds done? It has really done nothing, guys. April and May, we saw some positive movement in April. We thought it would do some good things there. Had a big drop-off, and it continued to drop off, and now we are sitting back below those moving averages. Thought we were going to get out of these moving averages here. Did not. This new trend line was drawn in here. As you can see, the trend lines are in a downward spiral here. Not good things for AGG. Not a really good place to have money. Those life cycle funds are not a good place to have your money just because you have some invested in AGG at that time. Let's look at it from a technical analysis for AGG. What are we seeing? Or the F fund. We saw same indicators, guys, that we've been using. Look at this now. We have a price percentage oscillator that is above the red line. That's a positive sign. But then look at this, the derivative oscillator, which is basically the green one on the bottom there. We went from 3.1 to 3.0. That is dropping, okay? The last 3 weeks we have dropped a little bit in price as well. Not a positive sign. I would give this one a yellow light. Cautionary to get involved in this fund. Kind of need to see where it's going to go for long-term charts. But yes, not a red light, so that's good. But yellow light is just proceed with caution. As you can see on the short-term charts, good positive sign here. Good positive sign here for our two indicators for our price percentage oscillator above that red line there, and our derivative oscillator, which is in the positive. Might be good to invest in this last week just to see where things go before dropping back into the G fund for those Thrift Savings Plan investors, or for the Roth IRAs, moving back a little bit more of your position in cash just to wait and see where these markets go. That's kind of where I see things are at for our charts this week, guys. Really appreciate you paying attention. Please like, subscribe, or share if you are interested in more videos. We put out weekly videos every week as long as I'm not training or going anywhere else. And as far as the Top Notch channel goes, where are we sitting at, guys? We just made a move this weekend. We were sitting 100% in the C fund. We decided to move some of our capital for those in the Thrift Savings Plan to the G fund moving into this last week just to see where things go for June. I think that's a good kind of play, just a short-term play, very short-term, to see where things will go. If you are in Roth IRA brokerage accounts, I would move some of your position into cash just to see where things will go. That's where we're invested on the Top Notch channel. We'll have to wait and see what June will bring. As always, guys, that's another Top Notch video. We'll see you guys next time.